Hello, friends. This is Jim Frimson here, Frimson Podcast 2026. Okay, before I start saying anything, thank you so much. Thank you for watching the videos. Thank you for your contribution, and then thank you for everything that you've been doing. I want to introduce a lady. I did interview her 3 days ago. I have the video on YouTube. Please pay attention to watch it. I did interview a lady called Abolade Akinropo, a very great, beautiful, high intelligent lady. This lady, I invited this lady to the studio because I did attend her program. And then I said, Mom, can you come over and then give us your ideas? She came. We did a video. Actually, we've done about 2 videos. And she gave a lot of information that I do believe it will help you a lot if you find the video and watch it. If you find the video and watch it, or even I will play the video right now. We have part 1 and part 2. So as soon as I finish this, just watch it. She has some accounting background from UK, British trained accountant. She came to the United States, studied insurance. Now she is a licensed insurance professional. She's also a financial advisor. She came and then gave a lot of information. But one thing that struck me, actually, that one thing that I was really happy with was he came up and said, James, 2026, you need to think about 70, 10, 10, 10. Those you financial advisors, I think you are aware of what I'm talking about. 70, 10, 10, 10. 70% of your gross income or your take-home income should be your everyday expenses. The 10% should be towards your gifts and other things. 10% should go to your savings, right? And then 10% should go to your investment. This is perfect thing that I've ever had. When we, posted the video, the first one actually, a friend of mine called me and said, James, this woman is very intelligent. So if you if you have time, if you don't have time, the video, we have part 1 and part 2. Just check it and then watch it. I do believe you should find it in YouTube, on YouTube, or find it on Facebook, Instagram, or part of it on TikTok. It's a great interview, folks. So if you are interested to watch this program, to watch this video, pay attention to it, and then learn more. And then moreover, contact her. Contact her, talk to her, and then see. She answer her phone from anywhere. in the world. Actually, as a matter of fact, I have business card here. Her phone number is 612 458 7133. 612 458 7133. And then her email address is boladeoba@gmail.com. boladeoba@gmail.com. It's very, very important to use the email instead if you want to contact her, or even you can comment at the comment section. But folks, this is really, really, really amazing lady. She's so smart. She knows what she talks about. And then I do believe she can help you a lot. Okay, thank you. Okay, we are back, right?
Yes.
So last time we were talking about 70, 10, 10, 10, right?
You got it.
Yeah.
All in one.
Yeah, because I went and then just I went through the numbers and I said, no, I don't want to make mistake anymore.
I like that. See, this is someone takes action.
Yeah. So 70, 10, 10, 10.
Okay.
And then you did explain the 70% and then the other 10%. So
I explained
left,
two 10%.
Two 10%.
Yes.
Right? So left with last 10%.
Okay. So we can do a recap.
Okay. Can you go over again so that maybe
Very quickly.
Yeah, quickly. So
Okay. So we're saying the 70, 10, 10.
Okay,
10
yeah,
rule.
yeah, sorry to interrupt you. The 70, 10, 10, 10 that you said is concerning investment. Probably maybe somebody is just watching the program
Right.
and then doesn't understand
It's
the
a
70.
financial structure.
What is she talking about? 70, 10, 10, 10, right?
Yeah.
So the 70, 10, 10, 10 is about
Financial structure.
financial structure. How you can set up a
Such
way,
a simple rule.
to help you save.
Yes.
Yeah, okay.
Yes.
So we did talk about that 70%, 10%, and then another 10%.
And we talked about the reason why it's 70, 10, 10, 10 is because it's 100%.
100%.
And
okay.
100% makes up of what comes in to you. So what income you make from either your job or your businesses or wherever your income is coming from in a month.
Okay.
So we at a time we're talking about 70, 10, 10, 10 rule, so that we can have a simple structure. You know, some things, you know, I don't know, when you're young, did you have acronyms back in the day, like something that you would say, I don't know, gosh, I can't think of one in my head right now that I'm going to acronyms, or something that helps you, you know, when you're doing your physics, chemistry, biology exam or something, that you use something
I wasn't good in math, so I don't want to think about that.
Are you kidding me? We have some rules, some golden rules. Anybody can comment on the chat to say what is the rule that helped you remember something very, very clearly. You know, for me, this has been a golden rule that I absolutely love. When I found out about it, I thought, honestly, this would be my favorite. 70, 10, 10, 10. It's 100%. 100% represents how much money comes to me. 70% of it is essential bills, essential living expenses for me. Okay. So I use that 70% for it. The next 70% is giving. I give, and we can talk about different ways of giving. The next 10% is towards your emergency funds. Accessible funds just in case of an emergency. It's not one to dip into that I don't know, Louis Vuitton bag. No, that's no emergency. Yeah, that you should go to your 70%. If you can't afford an LV bag, don't buy one. And wait till you can afford it, right? So, and then the last 10% is what we came back to discuss, right?
Yeah.
James. So the very last one, this is your young self putting money away for your future self. So let me repeat that. Your young self, while you're working, you need that 10% to put away
for your future.
For your future self when you want to be relaxing and not working so hard. So there's so many quotes, you know, people like Warren Buffett. You've heard of Warren Buffett, right? They're this financial giant people. And when you ask them simple questions about finance, they give you simplest answers like this. How to be financially disciplined. That 10% of you putting that away for your future self is really meant for you to really think and reflect that one day you may not be as active as you are today.
Yeah.
If you need to put money in something that is working for you while you're sleeping, if money, like Warren Buffett said, if money is not working for you while you're sleeping, you are doing something wrong. That's not the exact quote, but he said it along that line. What the money, your money has to be working for you. You see the 70% you're spending, that's for you to create a lifestyle for yourself for now. See that last 10%, I look away from it. I don't even think it exists. And you know how I do that? Because once it lands on my account, it's gone to the right bucket. But a lot of us wants to spend everything. I just want to see my money so I can do this and do that. But when that time comes, how do you think you want to live? You know, we all pray for long life. And let me tell you, people are living longer these days.
Yeah.
Do you know why? Yeah. All this technology.
Technology, yeah.
You know, the diseases that used to kill mankind. Did you see how we rescued COVID? Yes, a lot of people died. But do you know when 100 years before we had that deadly disease? Do you know how many more people died?
I think average lifespan at that time was around 35 years.
Yes.
Yeah. 35 years.
35 years.
Now it's around, US is around 70.
It's 70.
70
yeah,
years.
Even the Bible says 70.
70,
like, you know.
Yeah, so that means if you're working and do things right, you have to know that at least if you take care of yourself, you exercise, you save, you don't have stress, you should be able to hit that 70 mark.
Yes.
I'm not saying that but
we're not God now, so we don't know.
Things can happen.
Yes.
Though, but if you do things right, you should be able to do that. And then you were talking about that 10, 10, 10.
Don't forget the last 10.
Yeah, 10, 10, 10. 10.
10, 10.
3,
10.
Yeah.
Oh, is it 10, 10, 10?
Yeah, 10, 70, 10, 10, 10.
Oh, awesome.
70,
Sorry.
10, 10, 10.
Okay.
And then the middle one, the giving, right? Yes. Or the first one is the giving.
So the first one is the 70, right?
No, the second one.
The first 10 is the giving.
Is the giving.
Yes.
Okay. So let me add something to it. I think we send money back home to Africa a lot. Africans, it's part of us. We love our families. We love, we try. Even not Africans. These people from Philippines. Filipinos too are the same as Africans. They come, they work, they take care of their family. Let me give you a story before I continue. There was one Filipino lady called Anna. And this lady came to US almost about 24 years ago. And she was a domestic worker, helping the seniors, But what she did was, anytime she makes money, she send it back home to help her siblings go to school and all sort of things. After 20-something years, she retired and then wanted to go back home. By the time she went, she is a US citizen, all right. She went, And by the time she went, there was nothing home for her. She spent all her money sending it to the family. The same people getting money from her. When she went, according to her, she said nobody helped her.
Gosh.
She's old already, has back pain, can't do anything. She needed to come back to US. And this lady was telling me that she worked to take care of her siblings. All of them have completed their education, they are married, but they couldn't help her.
Wow.
You see, look, I'm not saying that don't do anything for your family, right? I'm so glad Abolade is here to give this 70, 10, 10, 10 rules. If you have to save 10% as a giving, any giving to families back home should come from that 10%. That's my thinking. Then when we talk about giving, sometimes we think giving is just giving to God alone. Is what we see as giving with blessings. No. God, we give the money to our church. It's fine. The church goes and then build the, spread the gospel of God out there, right? It's fine. But at the same time, if you give all this money and then at the end of the day, come and sit down and cry, that means there's no blessing in it. You get what I'm saying?
Yeah.
There's no blessing in it. So my advice to you is that 10% you're giving, 10% should cover your giving to your church and then your family back home. That means if you make, say, average of $63,000 a year, and then your 10% of it is bi-weekly, is around 260 or to something. I don't know what it is.
You were telling me you don't like maths before.
I don't know what it is. Yeah.
So
that money, 60% $60. I'm not saying
to
that.
Help you.
Yeah. Help me, because it seems like I'm just talking too much.
You never talk too much, no. So honestly, the story you just gave is a very typical story. And I've had so many people say that story, and I've had a bitter story as well. That one of my hairdressers was telling me, we were doing braids. Braids take 5 hours. She was telling me how a family, she sent all her money home. She was renting 1 bedroom in a house, and every single whatever she makes, her family are getting it back home. And then when she was sick, she wanted to go back home. She got there and they were like, "What are you doing here? You're the one who sends us money. We need your money."
They don't want you to go.
No, exactly. They don't want you to stop that money. So keep sending, keep being that ATM. I mean, we need to really rethink, because a lot of that time, God doesn't even want us to enable. That's not wise, because when we read the Proverbs, there's a whole lot of things that come out from the Proverbs. This is not going to be a wise choice for you to send everything you own, no structure, to somebody who doesn't know how hard you work to get the money. Of course, the way they'll spend it is not going to be in a creative way, in any way that will benefit anyone for the future. So you have to take control of this giving as well. And put some, I'm not saying you can never outgive God, but what it is God knows how to give you instructions too. Follow instructions. Like we said, you mentioned earlier that you can use part of that money. Let's say we looked at it, we said average American salary is about $63,000 a year, right? And then breaking it down, we say, let's say every 2 weeks, you're earning like $2,600 every 2 weeks. And every month is about $5,200 thereabouts, roundings with your taxes. So your money comes in every 2 weeks. What I would do, and my advice is that you set up something that you call auto debit.
Auto transfer.
Auto transfer. In the UK, we call it direct debits. I know, hey guys, UK. You call it auto. We call it auto transfer here. You create. Have you seen where you create, like you put money here, put money there, put money there? Your money comes into one central checking account. That checking account doesn't earn you anything, doesn't earn you any interest, but it's a direct way for you to manage your funds that's coming in, right? Now you set up auto transfer for that 70% to go into an account where you will set up other payments like your mortgage, your cars, where you get your groceries. Know that you've done a budget for that, everything is under control. So money goes out from there, and when it's done for that month, okay? And you keep putting every 2 weeks money, 70% into that account. You can watch your expenses that way too. So some things you need to cut back. You don't need to dine out and do takeout every single day, if that's what you need to do. And then the next 10%, $260 every 2 weeks. We sort of rounded it, right? Between $260 and $280, you can put that in a 10% account that you're giving, right? So if you're giving money, you're helping somebody back home, give them some rules and instructions too. Let us all have the discipline. Why does one rich person have to cater for everybody and enable them? Yes. Let's create leaders and uplift each other, show each other how to be disciplined. Have you seen so many other cultures that do that? Everybody uplifts the Jews. They said, they help each other. Money comes in, they work it, they get the jobs in, the money stays in their community. Do you know how long money stays in our Black community?
No, I don't know.
Do you know how fast?
Yeah, it goes very fast.
It's like drive through, film. It just goes like seconds. The money comes in and it goes out. And we don't keep it within ourselves.
Even one thing is what you're saying, money coming to us and then just leave very fast. We don't support each other even in business. We don't do anything to help each other grow. So I've seen people, instead of helping somebody's business, they prefer to go somewhere. I'm not saying, I'm not trying to create any confusion, but what I'm saying is that if we want to build ourselves, we need to support our businesses in our community. Absolutely. And then talking about this 10-10 savings that you're talking about, and then the giving, even if you are a couple, and this come in with 5,000, this come in with 4,000, it's 9,000. So before you realize, the 10% that you are giving is a lot of money. It's a lot of money in such a way that you can use it to help back home, pay your tithes, all of it, or whatever it is, and then, or support your church, and then help somebody, without touching the other. This thing.
The one for your future. So that's the last 10%. Do you remember that we started to talk about that? A lot of people don't feel comfortable with money that they live in for their future. They want to run to every single bit of money that they make. But imagine, let me give you an example of a compound factor. There's so many money rules, right? I won't go too deep, but something called Rule of 72. And they say
Rule of
72.
Okay.
Is a compound effect of money.
Is it part of investment terminology?
So part of something like that. So when you so it works in two ways. It works for debt and it works for growing money. So we get given a rate of return. So I don't want to go too fast because I want us to make sure that I'm keeping everybody informed of that 10-10. let me rewind before I talk about rule of 72. That auto transfer, in the first one, it goes to your money where you're taking care of your family and yourself. The 10%, first 10% goes to your giving. Decide what is in your heart. And I think James really captured a lot of diaspora's heart. When we come here, we have a heart of giving back home because we want people to do well back home. So that 10%, we can, and then our church, our community, and all of that giving, we can work within that too. And give. We give generously with that. And another 10% is that emergency fund. That emergency fund that we don't know what's going to happen, that we're going to be called in emergency. Hey, 500 is needed for this or that. That's where you take that money. You can even use that fund sometimes, emergency fund is what I call it, but you never know. I like to put that money in a high yield interest account.
Okay.
So the banks usually give you like 4%, 3%, depending on the economy. So you can put that money in there because the reason why I say you should put it in a bank account is because of the easy access. If there's an emergency, you don't want to wait a long time to access that fund. You want to access it straight away, right? The last 10% that we started talking about, this is the one where you will invest it for your future, right? This is the one that will attract something we call, all of our money attracts rule of 72, right? If you leave your money under your mattress, what's the interest rate of the money under your mattress?
0.
Exactly. There you go. So it will stay the same and devalue because inflation will come and eat it. Maybe the tax man doesn't get their hands on it, but that's it.
Yeah, last time somebody also was telling me that if you leave your money in your savings, you don't get any interest.
That's why I say that emergency fund, put it in a high yield because of accessibility.
Okay.
You want to quickly access the money.
Okay.
So I would say put it there for now.
Okay.
So as you're building the emergency fund, imagine now you building that. It doesn't give you growth. That's the thing. It gives you safety. It gives you easy access.
Okay.
And I'll talk about different buckets of money. And then we have the one that we want to put away for our future. Again, that's like every 2 weeks, you can have up to $500 a month to do for you. Okay? That $500 a month can go towards, amazing products like your index market funds. Like you're putting money in. Some people, I would say, if you have a 401k, that's pre-tax. Do a pre-tax thing. If your company is giving you free money, please take it. The rest, you really need something called like a control in place, like a protection, something to protect you when you're not working. If anything happens to you, you can, you don't have to sell your house. You put control in place. That's when you open something called an index universal life insurance.
Okay.
You put your money in there and it grows. It captures the fact that you got protection in place. Gives you a whole life insurance. So anything happens to you while you're building your money, while you're working, if you're, like we said, the lifespan of people, right? We don't know. We're not God. Just in case anything happens, your family are covered. They won't go into poverty. They won't need to sell your house. If illness comes, you get one with living benefits. Like if any illness comes, that means you can't work. Like we have friends that, stroke, hypertension, all of those things are so prevalent in like we don't know. We don't plan for it. But we don't know if it's going to happen. And it happens, poverty hits that moment. Because guess what? You go into your account and draw all the money. So you don't want that. Nothing is going to save if you have money in the stock market. It's not going to save you at that time. This kind of instant funding in a life insurance is something that's going to save you at that time. But you know what you're doing? You're taking that last 10% and you're putting it into something that's going to grow. And part of it is used towards protecting yourself, protecting your wealth. part of it. In that 10%, you get an index universal life insurance that has whole life insurance element, and invest the rest of your money in an index fund. An index fund, we always say, obviously, investment is a big old subject, right? The market, is your money in the market? Where is your money? I'm not trying to discuss that, but what I want to discuss is that the fact that you can put your money in a portfolio for your future, where you put in that money every month. Number one, it offers you protection. Number two, you can get rate of return when you invest your money in the market. That is growth. Then it gives you safety at the same time. The safety that bank is trying to give you but cannot give you growth. It gives you protection, it gives you growth, it gives you safety, and it gives you tax advantage. The money that grows in there is tax free. Yes, you put it in after tax, but it grows tax advantage. So you withdraw that money from your portfolio. It's like your personal bank. So I've just created right now a personal bank for you. So what do you want to do about it? With your 70, your 10, your 10, and your 10. So that money, the last 10, is the one you put away for your future and put controls in place to cover up everything and protect you.
So let me ask you this question. Who can start pulling this kind of money away? Is it someone who has been here for a long time, or someone who just came to the United States? So U.S. citizen or green card? Who can start doing this?
So that's a really good question. You can once you have a permit, you need some work permit, Social Security, paying tax so you need to be a part of this society, right? So either you still haven't got your green card, but you have your work permit in place, you can open it. In fact, it's a strong case for it as well, because you're embedding yourself in the community and the financial structure. And it's not me just saying it, it's actually there. You can do it as, from that lowest to, your citizen, just do it. It doesn't matter, as long as you have that status, you can do it.
You can do it.
Just open that account, and once you start building your financial future very, very slowly, while you're building, you're protected. And like for me, I don't look at that. I just say, okay, that money is for my future. So when I'm retired, I'm good. I'm looking at that money to have grown. I don't want to spend it now. And then when it comes to that time, I'm not able to maintain my lifestyle. And then we're going down to poverty. Where the government says, well, before we can help you, give you any medical, you got to spend everything down. I don't know. What's the spend down? Is it 2,000? To know that you don't have anything.
You don't have anything more than, I don't know. I think
about
2,000 or 3,000.
Yeah, something like that. Like you
have for the government to help you, you have to. Let's say you have a stroke. You got a stroke right now, and then you own a house. For the government to help you, you have to liquidate all your assets.
Absolutely.
Just to make sure that you don't have anything. Before you can be helped. It's not easy for you to save your. I think there is a way to, but I don't want to go there. But you have to, because I've seen it. I've seen people selling their house. They are old. They have to sell their house before they can move to assisted living for them to qualify.
You're a realtor. This is a real life story.
I see all these things all the time.
All the time.
I'm not.
Yeah, and from our end, let me tell you what we see too. We see that people who've actually gotten a policy like this with living benefits, that you're able to, if like something I talked to you about last time, like we had a client and they got a policy, the husband had a stroke. And they had a $500,000 policy. They paid them almost 90% of that $500,000 as an accelerated death benefit. Tell me what you're going to do with $400K in your bank account if you're sick, versus there's no income coming in,
I'll get well.
and all of that. I will
If
get,
I'm sick, and I see $400,000,
you get well.
I will
I like
get
that.
well. I will
See,
tell
that's
him,
the
say, you know,
spirit.
you're sick.
That's the spirit.
Just go away.
Thank
So if let me ask you this. I know this is not part of your segment, but I just want to ask you. Let's say if I'm sick, and then my insurance gave me that 400,000, just for example, and then during treatment, I don't die, and then become well. Can the insurance recoup their money from me, or I keep it?
I like your creative questions. Very creative. Okay, so here's the thing. I think even on the policy, it gives you it tells you, depending on the illness, let's say it pays out 90% of that policy, which is called accelerated death benefit, right? Let's say you're given the 400K, there you go take care of yourself. You have 100K remaining as a death benefit. Unfortunately now, you can't get insurance because they know you're high risk. I mean,
so would they cancel the insurance?
No, you got accelerated death benefit.
Yeah.
So you still have money, you still have some money in that policy remaining, right? So it's not cancelled, but you can't get new insurance. You can't say, oh, now can I add more money to it? No, because they already see you're high risk. You already got sick. So, but it's not even sad because you got 400,000, you got 100,000. Maybe I'm just giving a 500,000 policy example. People have millions in their policy.
Oh yeah.
Even our community, we're begging people to get 100,000, 500,000. Do you know how many communities they have 10 million?
Yeah.
They have millions in their policy. And we have wealthy people in our community. We're still asking to buy a simple life insurance. $1 million is basic.
Yeah.
I don't know how much I can scream it, but it's basic, even in a lot that I see today. Yeah. So what you're asking now is, no, that's the thing. Insurance is going to insure you when you're healthy, when you're younger and healthy. When you're older, obviously, if you're healthy, it's going to be more expensive.
Yeah.
There's those factors that insurance they're a financial institution. They're not trying to give you the free money, but it works in this context of large numbers. We are a large crowd of people. They do scientific calculations and say, oh, based on this, you're young, you are healthy, we can give you this. But people want to now start coming to me when they're sick, because I've spoken to them when they were well, they don't come. I've had one client call me, I won't say it's a client, a prospect that I've been talking to, call me when they were sick in bed and almost dying. And I almost could cry and say, why you call me now? I chased you so many times. Get something. We don't need to see, the chasing should be like you acting on your life. In our community, people chase for us to get, no, this is a time, 2026, I need to see a change in Black community, because it's really, really, really a bit frustrating, because it's something that can add value. Have you seen I have a client, the husband said, no, we're not getting it. We're not getting this. Guess who got sick and died? No.
The wife.
The wife. So the wife came behind and said, please, can you do it for me? I'll get him round one time. Guess who died?
The wife.
The wife.
Oh my God.
Guess who benefited? The husband.
The husband.
Guys, I mean, it gets, this is such a emotional, passionate mission.
Life insurance.
That I absolutely cannot stop talking about.
Yeah, when it comes to African men, I don't know, maybe we are afraid. If we get it, we will die early. Maybe we are afraid of the ladies.
Hey, beneficiary, you can control where the money goes to. You can control where the money goes to. Don't worry, I've had different stories. Don't let me. I don't want to tell stories, please.
Okay, hey, we will be back. Okay, we will come back.
This is fun.
Yeah. Okay, yeah, this is really